What does it mean for you when you see oil prices down 50%? I mean, gasoline is based off of oil, and you make ethanol that goes into gasoline. What does that do for your margins?
Well, the good thing was corn was down as well, significantly since the last time I saw you, and all of that just makes it a very competitive molecule. So right now, even today, ethanol is a 45-cent discount to gasoline. We're competing very well. We compete for our share of the gas tank. We're starting to see expanded blends. We're competing globally for the gas tank. And overall, we're doing very well. So oil prices, while they've dropped, we've had other great factors that have really driven the demand for the product overall and remain a great discount to gasoline.
But when it comes to corn, I mean, we have seen corn rally over the last few weeks. There are concerns we're going to see floods. It's going to tighten supply. That's going to have some price implications, and the prices could actually go higher. What is your perfect oil and corn price where you like to be?
Well, so what we saw is when oil prices dropped around Thanksgiving, corn prices really didn't drop at that time. But what happened is corn had realized it had to compete as a molecule as well, besides being an agricultural product, and has done that. Now, we've seen a recent rally because of some weather in the eastern corn belt. But overall, really, the black swan event was not really weather. It was really two back-to-back record crop years. And so what we're still seeing is a great crop. I mean, yield is really not dropping very much. While futures have rallied, they're expecting that the crop will come in a little bit worse than expected. But overall, we're going to have two back-to-back great crops. And that really is helping keep ethanol prices low.
I'm really curious about the politics of ethanol. You have some major Republican candidates this time around who are willing to go to Iowa, compete in the Iowa caucus, and say they don't favor ethanol mandates. Obviously, ethanol depends a lot on government targets for how much to be produced. Do you worry about the politics shifting?
No, not really. I mean, you've got to still get through Iowa anyways, but that's not really what drives us. I mean, the mandate is there, but it's really economics that are driving behavior today. So we continue to have 10% of the fuel supply because of the mandate. But overall, what you're seeing is expanded blends for E15, and that's just really truly economics. We're seeing major chains in the U.S. start to expand blends.
But the mandate is crucial to your business, right?
I think the mandate is important. And our view as a company is we're setting ourselves up for the day that the mandate goes away. And really, we're not focused on the next 20 years that the mandate will still be there. So overall, what's really important, you have to compete. Ethanol has remained a discount to gasoline for the last 7 years, except for about 6 months. Even today, we're 45 cents a gallon discount to gasoline. The blend margins are positive. And when we had no certainty on what the EPA policy was prior to that announcement that we were talking about, we were still blending ethanol to the max. So the blenders didn't even know what the rules were, and they still blended ethanol to the maximum levels because economics drive behavior.
But as a result of that, we have seen ethanol stocks climb over the past year. They're above the average that we've seen over the last few years. I mean, yes, you can produce as much as you want. You don't have to adhere to a mandate, but eventually you're going to have stocks that wind up not being used.
Yeah, but now we're below 20 million barrels. We're extremely tight still in the domestic supply.
Extremely tight? Really?
No, okay, well, we're tighter than we usually are. But, you know, we saw ethanol stocks drop to around 15 to 16 million barrels, and that really was the tightest we've seen in years. At under 20 million barrels, it's still very tight, and that's driven by export demand. We have great global demand growth. We've got countries like India, Philippines. They don't care about what the U.S. policy is, and they don't care about what big oil wants to do. They're saying, give us more ethanol. It expands our fuel supply. It's the cheapest octane in the world. We're still using MTBE. We need something cleaner, and they're coming for our product. We even sold Tunisia this morning.
Speaking, go further on that. What are the countries where you're seeing the fastest growth? You mentioned the Philippines and Tunisia.
Yeah, so
do they also need some kind of renewable fuel standard in order for them to want to import the ethanol?
No, actually, they want our product because it's cheap, and they want to bring cheap fuel into their fuel supply. So while the U.S. was uncertain about their policy, 30 mandates popped up around the world, countries like we've talked about, and even more countries today. So even in the Philippines, where it's a 5 or 10% mandate, we're seeing some retailers saying, bring us 20%. And we're saying, what do you have to do? Do you have to relabel your pumps? What do you have to? Oh, no. We're just going to blend higher. Well, what about the oil guys? We don't care about the oil guys. We want cheap product, cheap octane. We want to extend our fuel supply, and we want to give our consumer choice. So it's really changed the dynamic, the push-pull dynamic of the world today, where whenever there's a big excess of ethanol and we go to a very large discount to gasoline, the world steps in and takes it, which wasn't the case 3 or 4 years ago, which is really what's driving the behavior of the consumer.